What if offshore banking wasn't just for criminals and billionaires? It's a world of legal strategies regular people can use to slash their tax bill. Forget the Hollywood myth of shady briefcases. This isn't about hiding money, it's about strategically and legally placing it where it's treated best. We'll show you how the global financial system really works and how you can make it work for you. Section 1. The Foundation: Fact versus Fiction. First, the most important distinction. Tax evasion is illegally hiding money, and it leads to prison. Tax avoidance is legally using the tax code to your advantage. Everything here is legal avoidance. The old world of bank secrecy is gone. The new strategy is jurisdictional arbitrage, choosing countries with better laws and tax systems. The title is a hook. This is about legally minimizing your tax bill by playing within the rules. Section 2. The rules you absolutely cannot break. The key to staying legal is reporting. Financial secrecy is dead. Laws like America's FATCA and the global CRS force foreign banks to automatically report your accounts to your home government. U.S. persons must file an FBAR if their foreign accounts combined exceed $10,000 at any point during the year. The penalties for failure are severe, potentially tens of thousands of dollars or more. The game is total transparency. Play by the rules or lose. Section 3. Strategy No. 1. The first step. Your first foreign account. The simplest first step is opening a foreign bank account for diversification. It protects you from single currency risk and offers asset protection from lawsuits. You also gain access to new investments. While some banks are cautious with U.S. clients due to reporting, accounts can be opened in stable hubs. Remember, all interest earned must be reported on your tax return. This is the foundation for a global financial plan. If this is useful, subscribe and hit the notification bell for more guides on building real wealth. Section 4. Strategy 2. The Nomad Loophole. Become a global citizen. A more advanced strategy is moving to a territorial tax country like Panama. These nations only tax income made inside their borders, meaning foreign income is often tax-free. This requires becoming a genuine tax resident, usually by living there 183 plus days a year. The catch for U.S. citizens is huge. America taxes based on citizenship, not residency. For Americans, this strategy only provides its full benefit after taking the irreversible step of renouncing citizenship. Section 5. Strategy number 3. The Asset Fortress: Offshore Trusts. The most powerful tool for asset protection is an offshore trust, often set up in jurisdictions like the Cook Islands. This builds a financial fortress around your wealth. Creditors can't sue you in your home country. They must face the foreign court's nearly impossible legal hurdles. This provides unmatched lawsuit protection. This is not a DIY project. Trusts are complex and demand expert legal advisors to be structured correctly and remain compliant. So the key takeaway? Offshore finance is legal, but only with full reporting. Secrecy is dead. Compliance with rules like FBAR is mandatory. You have a range of options, from a simple foreign account for diversification to moving to a low-tax country or building an asset fortress with a trust. This is about strategic transparency, not hiding. It's about legally using the global system to your advantage. Always consult a professional first.